You've probably heard the hype, invest in IPOs and make massive returns. Well, let me tell you a story. I fell for it. I invested in an IPO hoping to ride the wave of profits, but instead I suffered a loss of $200. That's exactly right, $200 down the drain. And here's the thing, I'm not alone. Many investors fall for the same trap, and it's a mistake that I will never make again. So in this video, I'm going to explain why you should think twice before investing in an IPO. So stick around because this lesson could save you hundreds, if not thousands of dollars. Let's start with the basics. What is an IPO? IPO stands for Initial Public Offering. It's when a private company offers its shares to the public for the first time. Think of it as the company saying, hey, we're ready for the big leagues, so you can now buy a piece of us. Sounds exciting, right? You get to invest in a company right at the beginning of its stock market journey. And if it becomes a big thing, you can potentially make a fortune. But here's the harsh reality. IPOs are often overhyped. Companies use IPOs to raise money, and to do that, they hire a marketing team to build a buzz. They make their businesses look like Apple or next Tesla, but the truth is they never live up to their hype. In fact, they often fall flat, and investors like you and me end up paying the price. Let me share my own experience. I decided to invest in an IPO. I had done some basic research and the company's story sounded so convincing. They promised growth, innovation, and strong future growth. I thought to myself, this is it. This could be my chance to make quick money and reach my financial goal even sooner. So I invested, and you know what? The stock price started falling immediately right after the IPO. It dropped and dropped and dropped some more. Within a week, I was staring at a $200 loss. At first I was frustrated. How could this happen? Wasn't this supposed to be a sure thing? But then I realized something. This is a part of the journey. Ups and downs, wins and losses, they're all valuable lessons. And this lesson, it taught me not to invest in IPOs anymore. Here's the thing about IPOs that no one tells you. They are extremely risky. Let me break it down for you. Number one, overpriced stocks. When a company goes public, their main goal is to make money for themselves, not you. They often price their shares as high as possible to raise maximum capital. That means you're buying at a premium, not at a bargain. Number two, lack of data. IPO companies don't have a long public track record. Unlike established companies, you can't analyze years of performance data. You're essentially investing based on marketing hype and a few financial statements. Number three, volatility. IPO stocks are highly volatile. On day one, prices can skyrocket or plummet, and for most investors, it's the latter. Number four, insider selling. After the IPO, insiders like the founders and early investors often sell their shares. This flood of selling can drive the stock price down further, leaving retail investors like us with losses. So while IPOs might just seem like a golden ticket, they are more like a gamble. And unless you're prepared to lose, they are just not worth it. Now let me be fair, not all IPOs are bad. Some can be great for long-term investments. Companies like Google, Amazon and Facebook had successful IPOs and their early investors made millions. But here's the catch. These are the exceptions but not the rule. For every successful IPO, there are dozens if not hundreds that fail. And identifying the next Google or Amazon is incredibly difficult even for the professional investor. So if you're just starting out, my advice is simple. Avoid IPOs altogether. Focus on proven stable investments instead. Looking back, losing $200 was painful but a valuable lesson. I realized chasing the hype is not a way to build wealth. The journey to becoming a millionaire isn't about quick wins. It's about patience, discipline, and making smart, calculated decisions. IPOs may seem exciting, but in most cases, they are a distraction. Instead of focusing on speculative investments, I've shifted my strategy to dividend-paying stocks, ETFs, and growth companies. These investments may not be flashy, but they are far more reliable, and that's what matters the most in the long term. So here's my final takeaway. Do not invest in IPOs unless you're willing to take a big risk. The odds are stacked against you, and the potential losses far outweigh the rewards. This is a lesson I learned the hard way, and hopefully sharing this story will help you avoid the same mistake. Remember, the journey to becoming a millionaire isn't about chasing every shiny opportunity. It's about learning, growing, and staying focused on the bigger picture. If you found this video helpful, hit that like button, subscribe to my channel to get more lessons on my journey to financial freedom. Let's grow together and make smarter decisions along the way. Thank you for watching the video.